everybody. Too Fresh from the Trollbox, the BitMEX Trader podcast, together with our CEO, Stephan Lutz, and myself, Usi. We're going to have a look at the Bitcoin halving that is coming up in a little more than 2 weeks, as well as the shorter midterm market expectations that we see with Bitcoin, as this is probably the most interesting asset to look at currently. Stephan, as usual, how are you and how has your week been trading?
Yes, hi Uzi. Well, the week trading was basically as the last weeks. We have seen, and we talked about that in a couple of Fresh from the Troll boxes earlier. We're trading very stable between the 65 and 70K range for Bitcoin. Everything else follows that. The interesting thing is that there is kind of a battle now between the bulls and the bears, I would say. The bulls just hoping for the breakout towards the top, and the bulls are still, and the bears are still waiting for a correction that is much lower than 60K. And the question is, who will win, right? Or who will win first? I guess long term or midterm, we're all on the same page that Bitcoin is further to rise because of the halving and because of the rising interest. We'll come to that in a moment. But the question is, will there be a correction, a setback that for people like us will be an opportunity to buy in again, or whether we just go straight to the top and we just need to wait for a little bit longer. And with that one, just hinting at that, coming to it in a moment. The interesting thing is you could even at the spot ETFs in a slightly different way than we usually have done in the last weeks. I came to that in a brief moment of reflection. But let's start with halving, right? Halving in front of us, basically meaning for everyone who doesn't know that the supply side of Bitcoin will reduce dramatically by half, right? Yes, hey, there we see it as built into the system. Block rewards will have every now and then, depending on how many Bitcoins are in circulation or have been issued already. Not in circulation, we have lost quite a number of Bitcoins, but how many have been issued already, which means we will have a significant loss of new supply. And as long as that will come together with an equal or stable demand, well, I mean, you can do the math yourself.
Yeah, and I mean, there's always a lot of anticipation of the halving. There's all kinds of graphics and chat on crypto Twitter about, well, the X weeks before the halving, we'll see a dip, and the 1 year after the halving is when it grows the most. But I mean, all this aside, right, what it really is we've had roughly 1.6, 1.5, 1.6 million new Bitcoin distributed to miners in the last 4 years since the last halving. And that rate is basically cut to half. So what we'll see is essentially new supply is going to get shorter, right, as you said, but also, right, because Bitcoin is identical, so there's not one better than the other. Everybody that holds Bitcoin today is unlikely to change their behavior, whether they hodl it or whether they are currently trading it. So the assumption is always that anybody that comes new to the network, right, now competes for a much smaller pool of available new supply, right? I mean, arguably, and my personal opinion is of that too, right? If I have hodled Bitcoin the last 3 years and the last 6 years, then probably the halving will not make a difference to my behavior. But then obviously there's a lot of trader chat around it, and we'll see. I think it's currently looking towards the between 15th and 17th of April when the halving will happen. We at BitMEX have a nice competition, and we reward up to 1 Bitcoin to our top traders, and it will end on the day of the halving. So everybody, please feel free to join that trading competition, and you'll definitely benefit from the halving, no matter in what direction the price will move.
Exactly. And with halving, not just looking at Bitcoin price or crypto prices, the interesting thing with halving for me is looking actually at miners, because halving usually leads to kind of a shuffling around between miners as the block reward halves, right? I mean, your costs, all other things being equal, will rise to get to the same amount of Bitcoin mined, right? So this again, it's more on the supply side that you can look at for more opportunities. And then on the demand side, the interesting thing is what's the activity in the network, I mean, you can't really compare it. But if you look, for example, at active Bitcoin addresses, not total addresses, wallet addresses for Bitcoin actually go up steadily. But the interesting thing is, how many active addresses do you have for trading or for having transactions? Yeah, you see the chart here. Interesting thing for me is that since the last bull run, we have been pretty stable in active addresses or active wallets, right? Which means if there is interest coming into the market, creating more active wallets, we will see more demand, as we have seen in every bull run before as well. So what we have seen now, the rally we've seen with Bitcoin, is very much, I would say, institutionally driven, not so much by individuals. And we still lack in a way, which is a big opportunity, the rally that is due to the individuals that come to the market. So we still have a lot of opportunity for the rest of 2024 with halving, reducing supply, and potentially demand going up later this year. So, and with that one, just going slowly or just quickly into ETFs. ETFs have been talked about all over the place. I don't want to go into flows, etc. But the funny thing is that by the crypto native community, that hasn't been really looked at is with the spot ETFs. It's the first time that non-crypto native guys can actually do a basis trade, which means you go long ETF and you go short on CME. So if you are a, let's say, bank, a TradFi institution that hasn't been connected to any crypto venue so far, with the ETFs, you had the ability to do so, which in a way, I mean, I haven't looked at the underlying data myself, but if you look at how the open interest on CME rose dramatically in the last month, basically, and you compare it to the assets in the spot ETFs, it provides a new, not narrative, but for me, a new reference point, a new point of information that basically says maybe the spot ETFs have been driven more by institutional demand than by actually individuals buying spot ETFs, which again comes to the discussion of what will be individual demand later this year for Bitcoin and other crypto as well. So quite interesting to watch. So I'm looking at how the maturities of the CME futures will behave in the weeks to come. Interesting thing to look at for me, just intellectually, not so much from a macro perspective, but that gives an indication how much more we can expect later this year. But maybe with that to the market directly, right? Let's look at what we always do, like at funding rates and maybe a little bit more of technical analysis on Bitcoin today.
Yeah, let's take a quick look at the overall funding rate heat map. We've obviously had a bit of a correction in earlier this week. The market trended down slightly, but overall funding rates remain very healthy. You can see it heated up a little bit here. As usual, we see the meme coins leading the batch for anything that is higher funding rates, obviously more speculation, and especially then a very bullish sentiment, which tends to lead to the higher funding rates. But somewhere on the 1st of April, some people even made a joke about that. Somebody decided to flush the market, and we've seen that funding rates have really adjusted ever since, and we're in a very healthy area here. So these are the typical cycles, right? We're under 30 days here. If we were to look at 3 months, we'll basically see these kind of red and amber barriers every once in a while. The more bullish the market is, we have a heat up and then a cool down, a heat up, then a cool down. But you can see the gap between them goes a little bit up. So we can see that investors are now a bit more careful, yet the bullish expectation remains. Right? And so with that, we thought we'll have a quick look at where do we stand with the larger cycle right now. Again, looking at the upcoming halving. Let's have a quick look at Bitcoin on a hourly chart, on a daily chart, and on a 3-day chart. And we've also plotted here as the amber and blue line, the moving average double and the moving average channel. And whilst in the short term, we can't really see a tracking with the moving average, we can very nicely see a tracking, kind of a sort of convergence between the price chart of Bitcoin and the moving averages. So it's really sometimes touching it, but it's very nicely moving along with it. We've had a cross here, and that was a very negative sentiment a couple of weeks ago. Then we've recovered. It's top at the top again at the top of the channel, and now we're back in the channel actually. So on the daily outlook, and say in the couple of weeks, 2, 3, 4 weeks horizon, we should expect to keep trading within the moving average channel. And then just because this is a very long-term view, but say over the last year and a half, we can very nicely see also how we've basically tracked the moving average for a long time. So this is the 3-day moving average. I think it's even more perfect at the 2-day moving average, but the 3-day one shows very nicely how we're basically moving along on top of the moving average for most of the bull market ever since October last year. And with that, I guess.
And what you, yeah.
Sorry, go ahead.
Sorry. What you see here is if you go down and on the middle part of the chart, right, and you see the sentiment, you see that on the daily one we come from a negative sentiment basically more to neutral, whereas on the 2-day chart we come from a positive sentiment to a neutral as well. So now readjusting the market, it's time to position yourself. It's actually how personally I'm going to trade the next days. Being cautiously, but basically on a short-term basis, on a day-to-day basis, rather positive, with a little bit of caution, and having my stop losses set in the well, whatever right way is, but depending on my expectation, and then positioning and trying to make some money there.
Yeah, and I mean, you can see it almost in the candlesticks here, right? The volatility is great these days. So for traders, the daily charts, the daily candles are nice and big. So there is money to be made if you trade the right direction. We can see that this was not the case during October. This was not really the case during, say, the old Q4 last year. But ever since, we have much nicer volatility in the market, which again, for us traders is actually the thing we should look out for. And with that, Stephan, any tips, any guess how to position yourself for the next week?
Well, as said, I mean, opening up in the morning, so to say, whatever your morning is. For me, on a daily basis or intraday basis, I'm rather positive, optimistic, but I try to insure myself against downsides whenever I stop trading. So it's really, again, it's day trading time, which is great for people like us, for our platform, because that's where you can earn money. And can make some money out of the volatility, as you said, right? It's actually great. I mean, if you see like 65 to 70 trade range bound, and look out for any break of the ranges, whether it be downwards or upwards, right? But with that, I would say we should ask for the dice.
Let's do that. Let's go for the cube, the dice. Let's roll the dice and see where we're going to end up next week. Is it a buy, sell, a hodl, 100x? We have a buy. So the cube, the dice, remains bullish, as it has been the last times. So we're at 67 right now. See you at 70 next week.
Yeah.
Have a nice weekend, Stephan.
Looking forward.
And thank you very much.
Bye-bye.